Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's a fabulous start to the week for the bulls. It's a Monday morning. We have hit all-time highs. The Nifty, the Sensex, the Nifty Bank, all of them scaling new records today. And the Midcap index as well doing its bit. ICICI Bank is the big one in there in the last couple of trading sessions. That stock is up nearly around 6%. And that's been the culprit, really, of some of these big gains that we've seen on the index. I'm Nigel D'Souza. Welcome to Chartbusters, and with me as always, Mangalam Malu. Mangalam, couldn't be better.
Couldn't be better, Nigel. And you know, the people who are making the most of money right now are the people who wrote that 10,700 put on Friday itself. The 10,700 put on Friday added about 12 lakh shares in open interest. Mind you, that time it was in the money, so some aggression shown there. And now with this gap up, see, 1.5 hour into trade and 25 lakh shares have been written out there, with the premium declining 40%. Some more aggression seen on the 10,800 put as well. Remember, again, this is a few points higher, 40 points away from where we are right now, but some people believe that maybe we can go higher, and they've written about 6 lakh shares as well. Remember, the premium out there is 90 points. So a lot of action taking place in the markets as we're at the record highs. But first up, let's take you through all the top stories that we're tracking at this point in time. We told you first, and now it's official. IDFC Bank will merge with Capital First at a fixed share swap ratio of 139:10. V. Vaidyanathan of Capital First will be the CEO of the new combined entity with more than 88,000 crore rupees of assets under management.
And HDFC will raise about 11,000 crore rupees via the preferential allotment of shares. That's not all. The HDFC board has also approved raising up to 1,900 crore rupees via the QIP route over the next 12 months.
Granules India trades in the green after the RBI has approved an increase in its foreign investment limit to 49% from the existing 24%.
And its earnings all round. Strong third quarter coming in for Muthoot Capital, which reported a 50% jump in its interest income, while Bansali Engineering delivers a 10-fold jump in its profitability.
Sensex, however, reports a weak set of second quarter earnings, with revenues coming in at 840 crore rupees, higher by 44%.
All right, then the screen is looking very good. Pull up the advanced decline ratio. Now that should be up for you in the screen. It's looking very good. We have close to 3 stocks that are advancing for just 1 stock that's declining. And really, you should keep an eye out on some of these stocks. Manappuram Finance, case in point. That stock has spiked up. It's moving to the high point of the day. Bajaj Finance as well, I think, should come up for you. Bajaj FinServ, in fact, that stock has spiked up in the last few minutes. So keep an eye out on that one. And also a couple of these other names. Muthoot Capital, just take a look at that stock. It was up close to around 8%. People have said, well, it's done its run for the day. It's up close to around 14% as we speak. So that's moving higher. Kaya, another stock that's done so well, that as well has woken up. And in fact, the screen, Mangalam, is just looking so good. Volumes as well picking up, cash market volumes. We're only around 90 minutes into the trading session. We're already at around 12,000 crores approximately. So record highs, brilliant.
That's true, you know, but just as we build into the budget, a couple of things that really stand out, and a cue of caution, not really too much, but pull up the India Wix. That one's recovered about 22% from the low point of the day, currently trading with a 4% uptick. India Wix, high IVs, some volatility as the markets move higher. Usually one would like the India Wix to go down as the markets move higher, but remember, from the start of last week itself, it's moved around 40% from that mark of 10 to around 14.
I think ahead of the big event, we should see this, you know, because the IVs on both sides are moving high, the call as well as the put. And that explains, as Mangalam said, you know, normally if the Nifty moves higher, you'll see the VIX cooling down. That's what normally happens. But we're ahead of a big event, so that's why you're seeing this, that the Nifty is moving higher and even the India VIX is moving higher. Why? Because the IVs on both sides are moving higher as well. But we've gone on for a goodish bit. Our expert is with us, Prakash Gaba. Hi Prakash, what a start to the week. Splendid. The bulls must be feeling good after that 2-day weekend. They'll be glad to be back.
Yeah, looks like they had a party.
Oh, party's just starting, looks like.
Absolutely. I think target that we spoke about last week was 10,846. I think we are heading there.
Okay.
It's a matter of time. We are heading there. Today's move is good. Correction that we saw got absorbed very fast. In fact, didn't get any correction. So far, it's up. I say if we get a correction, buy it off. and maybe we'll see higher levels in the days to come. As far as Bank Nifty is concerned, I think 26,000 is on the cards.
26,000 at intraday did touch that 26,000 mark on the Nifty Bank. We've given up from there just about 10 points, not too much, Prakash, but 26,000, once it crosses, fresh longs could be initiated?
Absolutely. In fact, the next technical targets are 26,050, 47, 48 zones. So I think it's heading up there. Even if someone wants to buy on Nifty, you can still buy it as long as we have a stop of only 40 points. That's it. 25,950 should be the stop. That's it. Go on.
And stocks?
Two stocks I like. I would like to go for ICICI Bank. That certainly is looking good. Seen a good consolidation up move has started. Give a day or two, it's heading to levels closer to 580 zones. Stop below 555. And I also like HPCL. Seen a good consolidation. Today's move is encouraging. Target on the upside 445 zones. Stop below 425.
Okay, all right, Prakash, thanks so much for giving us all those cues. What a start it's been to 2018. The US markets, just early this morning, Mangala and me were talking about that it's had the best start, the S&P, since 2003. Remember, in 2003, the S&P 500 was around 900. Today, it's around 2,800. So it's telling you the kind of move, the kind of start we have seen for the global markets. But Mangalam, run us through the data points for this year, 2018. I look at the Nifty Sensex, I'll say we're up 3%.
Yeah.
But broader markets, big returns there.
That's absolutely, you put it out there. You look at the Nifty Sensex, 2.5%, 2%. But remember, mind you, these are in the first 10 sessions of 2018 itself. So we're just 10 sessions into this year, and 2.5%, 2% on the front line indices. Nifty Bank, which was an underperformer at a fresh record high, still sub 2%. But the mid-caps, 3%. Small cap index, 6% itself. In 10 days, 6% on the small cap index. But take a look at individual stocks. Coal India, remember you talking on 31st December, saying that it's been an underperformer in all of 2017. But in 2018, it's up 18%. Tech M, Yes Bank, Tata Steel itself up anywhere between 8 to 10%. But it's the real heavyweights that have performed. If you take a look at HDFC, ICICI Bank with today's move has moved about 5% this year, and LNT2 is up 5%. But these are frontline movers. Let's take a look at the non-index large caps and the mid caps. We have JSPL. You keep talking about metal prices, steel prices. That one's up 31%. Capital First, remember, ahead going into this big merger event itself was up 28%. PC Jewelers, Adani Ent, as well as Just Dial. Just Dial, surprisingly, up 18% from the start of this year too. But then you talk about small caps, the names we've never heard. Raju Engineers, for instance, up 74%. And you have a lot of volumes. Philips Carbon itself, 50%. And then these companies beleaguered by debt. GVK Power as well as Videocon, both of them up 30 and 45% each. All right,
Mangalam, thanks so much for running us through, all those big gainers. Clearly, a lot of money to be made in the broader markets. Keep an eye out on a couple of these mid-cap stocks. GMR Infra, that stock, in fact, has spiked up in the last few minutes, and volumes have really picked up on that counter. So GMR Infra is one stock you should look at. Just take a look at that. That one as well is moving higher. But the markets on the whole, we're not just pausing. 10,750, 10,760, HDFC, L&T, both the big boys, they are joining hands, they are taking this market higher. And Infosys as well. One would have thought, well, in August 2017, the stock traded at around 12.5 times. Now it trades at around 16 times, but yet, in fact, it's trading at a 20% discount in comparison to TCS. And that one as well is slowly recovering after briefly moving into the red. The heavyweights are moving higher, and that explains why, in fact, the Nifty as well moving higher.
One of the stocks that had been buzzing around all through last year is V2 Retail, up around 250% in the last 12 months. In 2017 itself, it was up close to around 270, 280 odd percent. But in the last 1 year, the stock has moved. Today, they have announced to the exchanges that they've opened 2 more stores, one in MP, the other one in Himachal Pradesh. Akash Agarwal joins us from the company. Thank you, Akash, for joining in. First up, your total number of stores, they stand at what, 46 with this opening? Earlier, I remember you had told us that you are likely to go up to 100 by March 2019. Is that on the cards? Can we see doubling of your stores in the next 12 to 13 months?
Yeah, so we just opened our 45th and 46th store yesterday, and we are on track to reach the number 100 by March 2019. So I think we'll be able to achieve the target and double our store count.
All right, Akash, I want to talk about a lot of your operations and various ratios, but the most important one and the one that troubles the street is the inventory days. If you could help us out with what was the number? I remember it being at around, anything between 105 to around 120 odd. What does it stand at for FY18 so far?
For FY18, it has ranged from 80 to 90 days.
Okay.
And it should continue to be at the same levels.
Oh.
Now, how do you plan to do that? Because, we've got data for the last, 4 or 5 years. It's never come below that 100 mark. In fact, the lowest that I remember is close to around 106 in FY14. So anything special that you're doing for it to come down to 80, 90?
Yeah, what makes you so confident?
We have rolled out a new inventory-based model at the store level, where the store has a DC location within the store. So we have mapped the whole store and taken out the capacity of that store, and we have changed our replenishment model around that.
Okay.
So it has resulted in better efficiency and productivity, as well as our DC productivity and our buying efficiencies have improved. Hence, we have seen a better of our stock turnover ratio. And if you check out the Q1 and Q2 results, you'll see that our inventory days are around that 80 to 90 days mark.
Interesting.
So I think in the future it will continue to be in the same range.
Okay, so is there room for further reduction going forward, since you're talking about all these levers that you've implied or rather employed into your stores as far as your inventories are concerned? Can we see that going further lower as time progresses?
Yeah, our internal target is to take it down to 75 days. So in a couple of years you might see it down at that level, but it all depends on the level of implementation of all these processes that I'm talking to you about, and at what accuracy and efficiency we are able to implement it.
Okay.
So the internal target is to take it down to 75 days.
All right, Akash, let's focus on your revenues aspect then. I remember the last time when you joined us, you said you're looking at growing by nearly around 40% for the next 4-5 years. So by FY 21-22, what should your revenue number look like? 2,000, 2,400 crores, is that possible? And also I wanted to ask you, what's the sales per square feet? The last number that I have is around 1,117. If you could update us for, what was it for the first half of this year?
For the first half of this year, I think our per square feet sales have been 1,000 rupees per square feet.
1,000 rupees, okay.
Because we have opened a lot of new stores and they take some time to mature and reach their peak levels.
Okay.
And I think we are looking at a CAGR of at least 40% in the next 4 years.
So FY21, 2,000 crores on the cards.
Yes, I don't see why not.
Okay, then that's pretty optimistic coming in from you as far as the 2,000 crore revenue target is concerned. So let's talk about your margins as well then. Private label, last heard we understood that it contributes about 10% to your revenues. Going forward, what is the likely contribution to your revenues coming in from your private label? And what does it do to your margins? They've been hovering around between 8 and 10% over the last 3.5 years.
So I think in the next 1 year, we will increase our private label contribution to at least 25 to 30%. And we are looking to take it up to 50 to 60% in the near future, maybe 2 to 3 years. And we are looking to sustain an EBITDA margin of around 10% going forward.
Okay.
And whatever benefits we're going to get in our private labels, we're going to pass it on to the consumer.
Okay.
So that we create a differentiation of price with our competitors.
Okay. All right. Akash, let's keep it very simple for all our viewers then. And in fact, the stock has been a big outperformer. So clearly the street is factoring in something that's not there in the books. First half of the year, your profit was around 14 crores. By FY20, FY19, what can this profit number look like? Are you looking at something like a 70 to 80 crores? Can V2 Retail deliver that kind of a number? Because that will, that can justify some part of this market capitalization of around 1,600 crores that we see currently.
Yeah, so as I said, we're looking to sustain our EBITDA margins at 10%, which further breaks down to around 6 to 7% of net profit.
Right.
So at a turnover of 2,000 crores in the next 4 years, I think we'll do a profit of about 140, 150 crores.
Whoa, that's a lot. 120 crores. But you spoke about doubling your stores over the next about 12, 13 months itself. Finally, this was your first foray into Madhya Pradesh. You guys usually have a cluster-based approach. So going forward, what geographies are you looking to open your stores into, and does that impact your rent?
I think our rents should sustain at the current levels, that is around 50 rupees per square feet. But yes, we're looking at other geographies as well. We're looking at going into the west as well as going to the south.
Okay.
And also we're looking to open in the similar regions that we're already operating in. So we are going in all directions and contingent to getting good locations. I think we're open to opening stores all over the country.
Superb. All right, Akash, thanks so much for stopping by, giving us all those details. All the best going ahead. So V2 retail, really the big takeaway is that the inventory days have come down to around that 80 days odd mark. And the other big one is that the first half of this year, they've done around 14 crores of net profit. He's saying that, in fact, 130, 140 crores as well is possible in the next couple of years. So we'll keep an eye out on that number. For the time being, the street likes it. In fact, the stock moves to the high point of the day. But more importantly, the market is up 90 points. We're almost hit a century today. And we're only 90 minutes into this trading session. Stocks that are doing well. HDFC. That said, I'm going to take leadership of this market. It's moved to the high point of the day, sitting with a gain of around 3%. And HPCL as well is chipping in there now. Some of those OMCs are chipping in there. The other big one has to be L&T. That as well has woken up. The only one stock that's not doing very, very well in the last few minutes is ICICI Motors. There has been some profit booking. But otherwise, it's been a fantastic start to a Monday morning, isn't it, Maga?
Absolutely. It might as well be a Friday, the way the bulls are cheering. Maybe the champagnes may open. You spoke about HDFC. HDFC Bank is also not doing too badly. In fact, that one's to move to the high point of the day. But talking about banks, we told you first, now it's official. IDFC Bank will merge with Capital First at a fixed share swap ratio of 139:10. Nisha Podar, who broke the story, now joins in with all the details. Over to you, Nisha.
Mega merger we first reported about, and now it's a done deal. IDFC Bank to merge Capital First with itself, and the swap ratio is going to be for every Capital First share held, 13.9 shares of IDFC Bank will be issued. Now, this is very critical. That's something that the market will have to react to. Whether or not it's too expensive and too dilutive for IDFC Bank shareholders is to be seen. Another very important point and critical important bit of this particular merger is the management change. V. Vaidyanathan, who heads Capital First, who has grown that NBFC from scratch, from ICICI Bank lineage, is now going to be the MD and CEO of the merged entity IDFC Bank as well as Capital First. That's something that the market should take very, very positively. Dr. Lal would be elevated to the position of non-executive chairman of the bank. Now, remember that the synergistic benefits of retail footprint coming in to IDFC Bank and the corporate book, and also giving that banking experience to Capital First as an NBFC, are the most important rationales because of this transaction has really happened. But management change is something that both IDFC Bank and IDFC Limited shareholders would be reacting to for sure.
Okay, all right, Nisha. Thanks so much for that. Well, SAIL, that's the other big mover in the last few months. Remember, steel prices, demand as well has improved drastically, and that's what could lead to a turnaround for the company. We spoke to Mr. P.K. Singh, the chairman of the company, earlier today, and asked him about his outlook on sales volumes, what's the EBITDA per ton going to look like, and also one of the big concerns, the employee cost. Let's listen in to what all he had to say.
We should be more than 18-19 million tons from the current level of nearly 14 million tons. See, the last financial year that we have completed, the EBITDA per ton was around 500 rupees, 502 rupees per ton. This year it will be more than 2,500 rupees per ton. We had been successful in reducing our employee cost by 15% compared to last year, compared to the earlier years. And this year also, this financial year also, that similar trend is going on. Our employee strength, which was around 85,000 last year, every year it is reducing by natural retirement by 4,000 to 5,000 employees. And apart from that, we are also giving a golden handshake where around 1,000 employees are taking voluntary retirement. Last year also 1,000 employees have taken. This year also more than 1,200 employees have taken. Oh, it is a win-win situation for both the employees as well as the company.
All right, that was the management of SAIL, but keep your eye out on the markets. The Nifty Bank has crossed that 26,000 mark, taking our markets at higher levels, sustaining it, and joining that party is ITC now at the high point of the day. With that, it's a wrap on Chartbusters, but you stay tuned to CNBC TV18